hold it without making that new low. It's just very fucking tight. So we got equal lows on the local, equal lows on the high time frame. We could see a nice little rally continue, but I'm not completely sold that this is going to be the rally that takes us to all-time highs. Could have some legs to it, right? But whether or not it takes us to all-time highs, I'm still pretty skeptical of that. So decent fluidity. Again, it did technically hold in this tight little range, but yeah, and the spot market has been backing it up, right? So we've gotten some decent spot demand that's come into the market. Would expected a little bit more of an upward movement, but you know, there's basically since the stream, there's been a lot of people hitting the market order button on the green side of the market. Price hasn't moved that much though, relative to how much market green has been coming in. So we could be looking at a little bit of a short squeeze here. And then we'll know after that whether or not it's going to have legs to it. Just because we're getting a rally today does not mean that it's going to be able to hold it, okay? Maybe it does, right? Anything's possible, but I'm not, as far as probabilities go, I'm not fully sold that that's going to be the case, okay? I hope I'm wrong about that, and I hope we do just fucking send it to the moon. But we're kind of in the spot now with the way the structure has lined up and everything that's transpired that I'm going to be a little bit more critical of Bitcoin on the way back up. But yeah, you have a lot of old guard. Pretty much what we're seeing right now is a lot of the old guard of Bitcoin. A lot of old whales who have been in Bitcoin for a while have been exiting. And then that's been getting absorbed by sort of the institutions and the new guard that are hopping in. The question is, will it be enough for the new guard to be able to absorb it? Because even though there's less supply on the exchanges, and even though the supply has gone to, a lot of that supply has gone to passive holders, so institutional guys are, like I've said it a million times, are way more likely to be passive market participants. They're not going to be likely to sell just because the price goes down. That's all good. That's all fine and dandy, and it's very bullish. But the higher that you go in the price, the less supply it takes to knock the price down, and the more money it takes to hold the price up. That's true in any financial instrument. It's called maintaining the float. Maintaining the float, the higher you go, the harder it becomes. Regardless of, who the holders are and how passive they are, you're still going to have active market participants in any market. That's why the market goes up and down. How do you go about using leverage and still risking 1% of your wallet? You use a risk calculator, but it's dependent on the distance between your entry to your stop loss. That's how you define the risk. And 1% is kind of high. I know that sounds crazy, right? 1% risk is kind of high, but it is a little bit high. You can, if you're experienced, 1% is not too crazy, but it's definitely on the upper end of risk, right? Even 0.5 is pretty high up there too, but yeah, if you're on a smaller account, 1%, you're like, dude, I'm on a smaller account, 1% is not going to grow my account very much. It's going to take forever to get, but you have to look at compounding percentages. That's the biggest thing. I swear, dude, if you spend enough time looking at compounding, understanding how compounding works, you will be fine with using good risk management and not risking too much on any individual trade. Regardless of account size. What is it? If you double $1 a day by the end of the month, you're like, you've got millions. You guys have heard that before, right? That analogy that sort of shows people how compounding works. Obviously, $1 is not enough to fucking open a trading account, but you get the point, right? And doubling the account size every single day is not really feasible. So obviously, it's not going to happen in a month, but it will take time. But at least you're not sweating every fucking 1 minute candle movement when you're risking 0.5% of your account. You can sort of let it run. You can stick to your rules a lot easier. It does get more difficult as the account gets bigger, because as the account gets bigger, 1% starts to become a bigger and bigger number founded in USD. That definitely does make it harder. Those are sort of walls you hit as a profitable trader. The profitable traders in the chat know what I'm talking about. When you hit like new walls, like say you start with like 10K, right? And then you get it to 100K. That 1% is now 1,000, which used to be 10%, right? of your 10K account. And then you get it to 1 million, and that 1% is now 10K, which was your whole fucking account when you started on each individual trade. And then you keep going up, right? Then if you can make it to 10 million, then it's 100K per risk, which was your whole fucking account per trade not crazy long ago. So those are the walls you sort of hit, which is why it's not good to just stare at your unrealized P&L and just stare at the USD number go up and down as you grow your account, because those psychological things can start to fuck with you a bit. Those are the major walls you hit after you become a profitable trader. 6-figure hell forever. But yeah, on a small account, 1% is like, dude, I'm never going to grow this account if I do 1%, right? But it really is the case if you can look at compounding. Because, like I said, 1% of 1 million is the whole fucking account that you started with at, say, like 10K. Or if you get to 10 million, 100K is 1%.